Shalom. First and foremost, I'd like to give all praises and glory and honor to Yahweh Ba'ashem, Yahweh Shai, Ba'ashem, Rakakadash. Double honors to the elders, apostles of Great Millstone, preaching His word, truth, and sincerity. And shalom to the Akim, scattered to the four corners of the globe, preaching the word, truth, and sincerity. And shalom to the Akim that be like unto the speckled bird, preaching the word truthfully and sincerely. And I say shalom to you Akim out there. And this is a sit-down lesson on September 21st, 2022 at 3:09 p.m. Central Standard Time. And this is a news article from CNBC.com. And this is from the Wall Street business market. This was updated on September 21st, 2022 at 4:07 p.m. Eastern Time. And over here Central Time is 3:09 p.m. And I highlighted this news article and it reads, in the news today, Dow Jones closes negative 500 points lower after the Federal delivers another aggressive rate hike, right? Because, I was kind of paying close attention. I was keeping my eye on it. After the Federal Reserve, they had like a 2-day meeting for Monday and Tuesday, and all the way into Wednesday, I believe, too. But mostly Monday and Tuesday, they was discussing plans, having conversations to come with, more ways to reduce the inflation. Now, after that report came, I believe the Dow Jones, the markets has rose up to like 200 points early in the day. And then it had went down to like 200-300, I believe, because I was keeping a watch on it. And then it rose up again. I was like, okay. It rose up to like 82 points. And then I would say like 15 to 20 minutes later, it had went down to like 500 points. And then once again, it went down to like 522 or 523. So yeah, hey, this is another clear example of modern day Babylon is falling, as the scripture has said it, and it's going to continue to fall. Now, as you see, the stock exchange had a good solid gain yesterday, because I was reading another article. They were saying after the Federal Reserve made that announcement to come with a more aggressive approach of a federal tax hike once again to find ways to decrease the inflations, to ease the inflations from continuing to rise, which it's doing right now, and the consumer spending is going up as well too, and everything is consistently going up, as they stated that, even if it messes up the economy, because their main focus was trying to reduce the inflation, which is not working. Even if you is raising the federal tax hike, as the little 2-day meeting that they had on Monday and Tuesday, to have the continuing aggressive approach to ease the inflation with the continual tax hike raise, But it seemed like that's not the case. It seemed like that's not working, as the stocks keep on like a balanced seesaw, like a up and down slope, a seesaw up and down slope, like it's a balance scale. Because times the stock and markets might have a good gain, and then like the day later, all those huge gains that they had, it just like crumble, crash. I mean, you name it, right along with the economy as well too. Not so good, crash. But I'm gonna read the news article. It says stocks fell in a volatile trading Wednesday after the Federal Reserve raised rates by 3/4 of a point. Right, because at first I believe they was gonna raise it from 0.75%, but I think it's like a new raise now. So they ante the raise up a little bit, so the federal tax hike increases as well too. After their little 2-day meeting on Monday and Tuesday, following into Wednesday now. And I'm reading it again for edification's sake of this lesson. It says the stock fell in a volatile trading Wednesday after the Federal Reserve raised rates by 3/4 of a point and forecast more sizable rate hikes in its fight against inflation, actions widely expected by traders. While the S&P 500 down more than 8% in the past month and 18% for 2022 heading into Wednesday, as Fed's action stocks were already pricing in an aggressive tightening campaign by the Feds that it could push the economy into a recession. It says the Dow Jones Industrial Average last 294 points lower, or 0.9% after being up much as 314 points. The S&P 500 dipped 500, 0.7%, and the NASDAQ composite traded 0.7% lower. The stocks were volatile as traders parsed through the rate decision in the latest comments from Jeremy Powell of press conference. The Fed raised hike by widely expected 75 base points and said it expected its so-called terminal rate to reach 4.6 to fight persistently high U.S. inflation. That the rate at which the central banks will end its tightening regime. The central bank also indicated that its plans to stay aggressive of heightening the rates to 4.4 by next year. You can only steer the ship towards the storm for so long, but eventually there come a time when you need to batter down the hatchet with the Fed's third consecutive 75 base point rate hike over the past 4 months. Market participation should be looking for cover to weather the upcoming storm, said Charlie Ripley, a senior investment strategist at Alliance Investment Management. The Treasury yields popped on the news. The 2-year rate, which hit the highest level since 2007, last traded at 4.1%. The 10-year rate jumped about 3.6%. All major S&P factors finished sessions in a negative territory, led to the downside by the consumer discretionary communication service and growth-focused companies. Travel and entertainment stocks also took a hit, along with beating up big technology stocks, Apple, Amazon, and Meta platforms. So yeah, another clear example of modern day Babylon is definitely falling again. As they say, the economy is reaching further and further and furthermore into a potential recession as they continue to battle the high inflation in the United States, the continual increase of consumer spending, the continual increase of everything is constantly, consistently going up. the not so good housing market, the mortgages keep on going throughout the roof. People paying rent throughout the roof, paying food continue to go up on the roof. Everything that's being taxed increasingly throughout the roof now more than ever. Even though the gas productions, oil prices, and inflation been down a little bit, but it's going to skyrocket right back up as we're entering the months of fall and winter as well too. So expect to see a continual up and down balanced slope of the stock market, the Dow Jones, the S&P 500, and the Nasdaq Composite as well too. Going to continue to have some good days, and a lot of them is going to crash and have a lot of bad days as well too. So that shows you more continuing clear signs of modern day Babylon is falling on an economic scale, and this trend is definitely going to continue, So with that, I just wanted to bring out this news article of the Dow Jones crash once again due to the fact the inflation increasing as the Federal Reserve have their little 2-day meeting on Monday and Tuesday as they enter in Wednesday. Shows you another clear sign that the markets crashed again as they continue to aggressively raise up the interest rates on the base points of 75% for the fourth consecutive straight month as they continue to tackle the inflation, which is going to continue to go up. Gas is going to continue to go up, even though you've seen both declines on both of them for the past few months. But expect to see the inflation and gas product is going to go back up, cost of living, etc. You name it, So with that, once again, I hope this is in the news on September the 21st, 2022 at 3:20 p.m. Central Standard Time. Hope this was edifying to the audience out there through the spirit, power, grace, and mercy of Yahweh Yahushua. And first and foremost, I would like to give all praises and glory and honor to Yahweh Ba'Hashem, Yahweh Shai Ba'Hashem, Wakakadash. Double honors to the elders and apostles of Prayer Millstone, preaching the word truthfully and sincerely, and shalom to Akim, scattered through the four corners of the globe, preaching the word truthfully and sincerely, and shalom to the Akim that be like unto the speckled bird, preaching the word truthfully and sincerely. And until next time, I will say shalom and a ball.